Welcome to BuyTheDips.news. Today is February 26th, 2026. Our AI model found 15 stocks today with both an article by rating and a metrics by score. In this video, we cover 5 of them. Here's the breakdown. The following content is for informational and educational purposes only and does not constitute financial advice. Always conduct your own research and consult a licensed financial advisor before making any investment decisions. Snowflake Incorporated Technology Sector. Software, application. Snowflake Incorporated, NYSE, Snow, delivered strong Q3 results with revenue up nearly 29% year-over-year and product revenue up 29%, exceeding expectations, with product revenue growing at the same pace to $1.16 billion and exceeding expectations. Operating margins expanded meaningfully, with non-GAAP operating margin expanding more than 450 basis points to 10.8% and free cash flow margin approaching double digits, reflecting improved cost discipline across sales, R&D, and G&A despite ongoing investments in growth. Cortex AI reached a $100 million revenue run rate a quarter ahead of plan, and AI influenced roughly half of all bookings during the quarter, with Snowflake Intelligence emerging as the fastest adopted product in company history, broadening data access across enterprises and driving deeper platform engagement. Remaining performance obligations rose 38% to $7.88 billion, signaling strong multi-year demand visibility, while net revenue retention remained healthy 125%, underscoring durable customer expansion even as customer expansion moderated modestly. Here are the key growth metrics for Snow. Sales growth trailing 12 months, 29.2%. EPS growth next 5 years, 37.6%. Target price upside, 43.3%. Drawdown from 52-week high, minus 38.3%. 200-day smooth moving average position, minus 20.8%. Overall score, 71.5 out of 100. Metric rating buy. To summarize Snow, article recommendation is buy. Gross stock score is 71.5 out of 100. Metric rating buy. SoundHound AI Incorporated Technology Sector. Software, application. SoundHound AI, NASDAQ, Sound, surged after NVIDIA CEO Jensen Huang dismissed fears that AI would cannibalize enterprise software, arguing that ServiceNow and other platforms like Zscaler and CrowdStrike are uniquely positioned to deploy fine-tuned AI agents that utilize existing specialized tools. Palo Alto Networks, NYSE, P&W, dropped 4.6% after analysts suggested that the recent SaaS apocalypse sell-off had pushed valuations into deeply oversold territory, though the stock remains volatile and has had 12 moves greater than 5% over the last year. SoundHound AI is down 16.5% since the beginning of the year and trades 32.4% below its 52-week high of $221.38 from October 2025, with investors who bought $1,000 worth of shares 5 years ago looking at an investment worth $2,507. Here are the key growth metrics for Sound. Sales growth trailing 12 months, 120.5%. EPS growth next 5 years, 36.7%. Target price upside, 81.6%. Drawdown from 52-week high, minus 59.5%. 200-day smooth moving average position, minus 27.3%. Overall score, 80.0 out of 100. Metric rating buy. To summarize Sound, article recommendation is buy. Growth stock score is 80.0 out of 100. Metric rating buy. SRAD. Sportradar Group, AG. Technology Sector. Software, application. Sportradar Group, AG. NASDAQ, SRAD, announced on February 9th that it had entered into a multi-year agreement with NBC involving the provision of data, as well as broadcast technology for NBA seasons 2025-26 and 2026-27. The technology in question is the GameFrame technology that uses AI and live player tracking data to display on-screen graphics during live games, giving commentators real-time insights into things like player positioning or explaining certain plays during the game. The agreement builds upon long-standing relationship with NBC and reflects how Sportradar continues to expand the ways it supports their live sports coverage. SRAD is considered one of the 11 best 52-week low-technology stocks to buy now based on analyst ratings. Here are the key growth metrics for SRAD. Sales growth trailing 12 months, 19%. EPS growth next 5 years, 96.3%. Target price upside, 71.9%. Drawdown from 52-week high, minus 42.9%. 200-day smooth moving average position, minus 26.1%. Overall score, 71.0 out of 100. Metric rating buy. To summarize SRAD, article recommendation is buy. Gross stock score is 71.0 out of 100. Metric rating buy. TLN. Talon Energy Corporation Utility Sector. Utilities, independent power producers. Talon Energy Corporation, NYSE, TLN, is positioning itself as a premier play in the 2026 U.S. energy market, capitalizing on surging demand for stable, carbon-free power from hyperscale data centers. Talon Energy has reaffirmed aggressive 2026 guidance, projecting adjusted EBITDA of $1.75 to $2.05 billion, nearly double 2025 estimates, driven by strategic fleet expansion, including 2.6 gigawatts of new natural gas capacity in Ohio and Indiana. Long-term nuclear power contract with Amazon Web Services, NASDAQ, AMZN, provides revenue visibility of approximately $18 billion over the life of the contract, supported by long-term demand visibility. The stock recently pulled back from its January highs of $451 to the $360 range, attracting notable bullish bets, including a large risk reversal trade involving 500 contracts of $300 puts and a $360/$400 call spread. The strategy effectively sells downside protection to fund upside exposure while positioning for gains if the stock approaches all-time highs. Here are the key growth metrics for TLN. Sales growth trailing 12 months, 80.2%. EPS growth next 5 years, 17.2%. Target price upside, 19.4%. Drawdown from 52-week high, minus 13.6%. 200-day smooth moving average position, 10% above. Overall score, 71.5 out of 100. Metric rating buy. To summarize TLN, article recommendation is buy. Growth stock score is a 71.5 out of 100. Metric rating buy. Zeta. Zeta Global Holdings Corporation Technology Sector. Software, infrastructure. Zeta Global Holdings Corporation, NYSE. Zeta reported strong Q4 revenue growth driven by strong demand for its Athena AI interface and data-driven enterprise adoption. Zeta Global Holdings reported its 18th consecutive beat and raise quarter and raised its fiscal 2026 revenue guidance, signaling confidence in its long-term AI-driven growth trajectory. CEO David Steinberg highlighted the company's proprietary data assets and Athena AI platform as key growth drivers. Zeta expects revenue of $1.75 billion to $1.76 billion in fiscal 2027, up 25% year-over-year and beating analyst estimates, driven by continued adoption of Athena and enterprise-grade AI tools. Here are the key growth metrics for Zeta. Sales growth trailing 12 months, 29.7%. EPS growth next 5 years, 29%. Target price upside, 61%. Drawdown from 52-week high, minus 27.5%. 200-day smooth moving average position, 1.9% above. Overall score, 78.5 out of 100. Metric rating, buy. To summarize Zeta, article recommendation is buy. Growth stock score is 78.5 out of 100. Metric rating, buy. That wraps up today's 5 buy-rated stocks. There are 10 more buy-rated stocks today that you can view at BuyTheDip.news, along with full analysis for every stock. If you found this useful, please like and subscribe for daily signals. Visit BuyTheDip.news to access buy-rated stocks and full growth metrics in real time, the moment they're available rather than after market hours, along with hundreds of additional stocks that weren't rated a buy each trading day. Nothing here is financial advice. See you next time.